All right, good to go.
All right. Howdy, guys. Happy, what is it, April 18th? Pretty exciting stuff in the markets recently. We've had a couple of nice positions, finally catching some momentum. Bitcoin still holding up, like we were kind of chatting about before we started the recording. Like always, there's drama between forks and fake Satoshis and all that BS in the crypto space, which, it can be funny to talk about, but like somebody said in chat, it costs people real money when people try to play those games. So that's why we just try to trade the most liquid, legit coins that have the lowest risk of getting delisted or having thin order books or being prey to like pump and dump scams from those types of groups. And that's why we like to just focus on the bigger picture. So I'm going to kind of run Bitcoin scenarios, just kind of talking about what I'm looking at. And we'll talk about a couple of different altcoins. What I like to do, so I'll just tell you guys like kind of the way that I look at the markets every day, like kind of my routine is I sit down on my computer and, any one of these websites like CoinMarketCap or any of the other dozen kind of copycats nowadays that can give you just a snapshot of what's going on, right? So you look at this, look at the total market cap, and I just kind of scan down like the top, 50 or so coins and just get a sense of like the capital flows for that day. And you can see there's, more than not is green today, right? And then what I like to do is kind of come over here and take a look at the total to market cap just to see if there's any kind of really clear either a breakout or a breakdown or some kind of capitulation. And for those of you guys that don't know, CoinMarketCap the total 2 excludes Bitcoin. So you can look at total, which is including Bitcoin, but I like to look at the non-Bitcoin charts just to kind of get an idea of altcoins. And then that kind of gives me sets the tone for okay, how is the capital flowing today? And then from there, I dive into the individual coins. Rock, is there anything that you do differently to kind of, start your day off or to kind of get perspective on the markets?
Yeah, well, the first thing I do is look at the Bitcoin price and then a glance at CoinMarketCap, and then I go through the news or the latest drama. So that's usually my morning daily coffee routine.
Nice.
And that's pretty much what I do every day, 7 days a week, every morning.
Cool. Yeah, I think that's a good place to start, just kind of looking at the markets as a whole and then drilling down to the individual things. So I use Feedly, JJ. So Feedly is it's kind of like an RSS feed aggregator. And I have a few of the top sites. I mean, there's so many knockoff crypto news sites now. I just focus on really the major ones. CoinDesk is obviously the biggest. And then if there's any keywords that have Bitcoin or cryptocurrency, every now and then Business Insider or Forbes or Fox or CNN or one of those major networks will post an article about crypto. And that's usually a good counter indicator. Whatever they're saying is usually wrong in some capacity. So that can be a good counter news. If it's something really bullish, we get paranoid. If it's something really bearish, we kind of get excited. Feedly's, Travis said he uses Feedly too. So anyway, that's kind of how we start the day. So and by the way, guys, I forgot to mention, for those of you that filled out the survey for our summer event, last year we went to the Cayman Islands and just had a blast with you guys. And so a couple weeks ago, we sent the survey out to you guys. It's either between Amsterdam or Bali for our next event. We have decided on a location, and we literally are waiting for one more final email from the hotel just to confirm the amount of spots that they've reserved for us. So those of you that filled out that survey, you're going to get an email in a couple of hours with the details, and you guys have priority registration. And then if there's some spots open over the next day or two, we'll post it in Discord. But those usually fill up pretty quick. So just wanted to let you guys know that.
So where is it again? Siberia?
Siberia, yeah. Up near the Arctic Circle.
Nice.
There's some really cheap energy for a massive Bitcoin mining operation we have going.
Nice. We could all stay in an igloo.
Yeah.
Great.
Keep each other warm during this crypto winter. So anyway, just want to let you guys know that. So let's go ahead and dive in. So just kind of getting you guys caught up on Bitcoin. As we've been talking about for several months, had a major line in the sand through this resistance area. We got a really fast, high volume breakout that happened in the matter of just a handful of hours, if that, maybe 1 or 2 hours was the kind of that first breakout. And then if we drill down to kind of the intermediate or intraday price action, you can see the market's been holding higher lows. And I think I did this in a watch list was my last chart. Let me pull this up. Yeah, so as I said in my last watch list with this chart, I said looks like buyers are defending the 5K area whenever we had this pop. So you were kind of seeing like these higher lows being put in, right? And I drew up this kind of yellow box because to me, this is like the market structure where you have like strong support in between, 46 and 4,800 down here. We also have, resistance here through the 53 to 5,500 level, depending on which exchange you're looking at. And on the daily chart, it's kind of developing into a bull flag. So you can see, bull flag again is the pole and then the flag where it consolidates with higher highs and higher lows. And then you get, usually outside of that, you get an extension. And so if bulls are able to stay in control and give us a secondary push here, I ran a couple of fib extensions. So you can see from the breakout to that first pivot high to the retracement, and that 100% extension lines up around, call it 5,900 to 6K. We'll just label that the 6K area where that blue circle is. And we do have another area to get through, which could act as like a double top through call it the 5,500 area where the 61% and this prior resistance lines up. So I took a little bit off the table, as you guys know, back here, but I'm still holding and just trying to be patient with this. This is one of those scenarios, like I talked about in my YouTube video yesterday, where I'm like, I don't try to guess. I don't try to predict. I set a plan for the upside and a plan for the downside. So the plan for the downside is if this price structure doesn't stay intact, I'll cut it off and look for another type of setup. If it goes to the next target and we get up in the 5,900 to 6K, I'll probably take more off of the table there, unless it just blasts right through it, which I think the probabilities of that are very, very low because this is a 6-month line of hope, as we've called it for months. So that's really that's my plan. Very, very simple. Not a whole lot of things to overthink about that. And then, kind of looking down, obviously we've got, Tezos and BAT and a few others that we've been kind of talking about recently, trying to be patient with those. And Rocky, I'll pass the screen sharing to you, man, if you want to go through and share some charts and stuff.
All right. Sounds good. All right. All right. Can everyone see my screen?
Yep. Looks good.
All right. I just wanted to share my thoughts on Holochain, and then I wanted to kind of do some back analysis, looking at prior trends and how they behaved and stuff. I know we have a lot of new people who have been joining crypto recently, or people who may not have been here for the 2016 or 2017 bullish price action. So I wanted to show folks exactly how a market behaves if a market does turn into a full bull trending market. But before then, I'll go into Binance for hollow chains. So those who have been with us for a little bit know that I bought some at 6 Satoshis actually before it was listed on Binance. It's probably like somewhere here at six Satoshis. And I've just been trend riding this. I've just been very, very patient. One sec, sorry. I've just been very, very patient. So, for example, you can see recently I posted something. We had this a bit of a throwback here. Basically, prior resistance, turn support. If I were to do let's say a fib retracement during the entirety of the run up, you can see that the throwback actually retraced fairly close to the 0.618 area, which is I kind of like that area because it's like the golden ratio type area. And I've noticed that the markets tend to, I mean, there's a general sweet spot that could be anywhere in this zone, but I've seen that there tends to be a lot of, I almost viewed it like as a magnet area on the fib tools, whether it goes a little bit over or under. I find that a lot of times, price structure wise, more often than not, I've seen dips and extensions hit those areas. If I were to run an extension, let's say just off of the immediate. And so basically, you know, my strategy, a lot of people know that my strategy has changed a lot from previous years. You know, we're at I think an early phase in the market, a new market cycle. We don't necessarily have confirmation of that, but that's just the premise that I'm going on as far as my own trading plan and strategies are concerned. Now, 100% extension, you know, like a 10x multiple on the BTC charts was my first target that I was gunning for. Now, on the USD charts, it's a little bit different. So possibility of taking some off the table there, but I'm extending that up a bit to 80 just to kind of reduce my taxable gains. And like right now, you know, even though it popped up and it retraced and it does that sort of thing, you know, so far as like, as long as I'm in profit, as long as it's consolidating and showing bullish structure, I think that, you know, I'm just holding it for me is working, right? So I'm just being very, very patient. Let's see if I were to go, oh no, that's not this. By the way, the hot on Bitfinex is a different market. Let's see if there's a USD market. So you can kind of see there's not a lot of USDT data on this historical because I think it's just a relatively new market. Yeah, there's not a lot. You can see that there's a bit of an ascending triangle that did break out on the USD chart on Binance. So a bit of volume. So we'll see how that plays out. That's one of my positions. Looking at Tezos, I'm being extremely patient with Tezos. Is you know, as tempting as it is for me want to play the market, and there's, you know, we've discussed this many times, there's different ways of trading, different ways of playing around. Like, you know, if someone was doing like more smaller moves, you know, they could obviously like sell into strength when market spikes up and then try to buy dips on the throwbacks. You know, there's definitely many, or scaling in and out. Like I used to do a lot of scaling in and out where I'd be in a position and I'd sell on a spike and then buy a dip or add on a breakout and just kind of like finesse and play around with the markets, which is great. And I think it's definitely a good approach for anyone starting off or whatnot. Just the downside though is that it just creates a lot of paperwork, taxable events. So there is a cost to playing that game. So it might seem like one is making more by trying to catch all those dips and waves and stuff, but that's not necessarily always the case when you take in time and tax and stuff like that. So right now you look at Tezos, we're kind of bumping up against resistance, and you know, I always, whenever I see a trend, and I personally, I really like the structure of this market. I like that it's been having long periods of consolidation. I like that it's taking its time. That's not just like shooting straight up in one big green a liquid candle. You know, we kind of popped our head above, you know, attempting for a breakout, but because we had a run up from here all the way to the resistance point, that was like a 75% gain. It wouldn't surprise me if we kind of did like a bit of a cup and handle formation, like even if we had like a throwback there, perhaps to retest that resistance point and then ramp up. I mean, it all depends on how eager market participants are. So that this wouldn't surprise me at all to see something like this, because oftentimes when you get a run up that tests a major resistance point, especially if it's made big gains of like 70% or so, it usually won't just break it on the first go. Usually it's got to test it, and you could see the instant it popped its head up. There were some sellers that stepped in, but I've also seen on real bull trending markets, sometimes what ends up happening is people try to get too cute with the markets, and they try to, like, you know, sell at resistance and buy the dip. And one thing that can happen if a market is really bullish and builds up bullish momentum, what can happen is it could just like continuously creep up higher and higher each day. Like we've seen that with Ethereum. And what that'll end up doing is that could actually frustrate a lot of traders, right? I'm sure everyone has experienced that, where you're in a kind of a trending market. You try to get cute with the market. Oh, there's a nice spike. I'm going to sell at resistance. I'm going to buy a dip. I'm going to finesse the market. And then you don't get the dip. And then you're in a catch-22 of, oh, do I buy higher than where I sold, and blah, blah, blah. And then suddenly you're in this like kind of existential crisis, and possibly even chasing the markets, right? So this is kind of one of the reasons why I'm just laying back. I'm being patient. You know, I could try to play the waves. I could sell at resistance, buy the dip, sell at resistance, buy the dip. And one could theoretically compound their profit exponentially by doing that. However, that assumes that you're going to time every single move with perfection. So you have to actually ask yourself the question: if you're in a bull trending market, is it worth creating all of the extra paperwork and taxable gains? Because obviously a taxable gain is a loss, right? Like, yes, you've made a profit, but now you have a debt. You now have a debt on the books that you have to deal with, right? So you have to, if you're going to play that game, you have to make sure that you're actually going to time the market with like extreme sniper precision, that it's going to be worth it. Because if I, like, let's say I sell here, and I'm like, okay, I think this is going to retrace or whatever, and then it goes up higher, and now I'm like, oh crap, do I buy back higher? Let's say I do buy back higher because I don't want to miss out on the move. But guess what? I've now created a debt obligation for myself by selling there, and now I'm buying back higher. Whereas if I just held it and didn't do anything and just relaxed and stopped trying to get cute and like stress about timing everything and catching every little bump and tick in the move, I don't create any debt, any taxable event by doing that, and I don't have to try to time things precisely. Someone's saying, good to keep in mind there are places in the world where taxation doesn't exist. Exactly. So one has to kind of base their strategy and model on what's good for them. Obviously, if you're in a tax neutral jurisdiction, you can throw all of that out the window, and it doesn't apply to you. So you can play around with different models and such. On another note, so I wanted to kind of just to give everyone an example. I'm not saying that this is going to just turn into a massive bull market. You know, we're still coming out of, I feel like in the Bitcoin charts, where it seems like we've transitioning from the slow grind perhaps into like phase one of the bull. Like we might be at a transition phase. We don't necessarily have confirmation because we need more higher lows and higher highs, but there certainly does seem like a lot of evidence of accumulation, as we've seen in several markets, where you've got the sell-off, the flat support holding up, and then the breakout out of the zone, and then higher lows in a trending market. So like, technically, something like Tezos, if you were to look at this, technically this would be considered a bull market. But where things can get a little bit muddy is because of the high degree of correlation everything has to Bitcoin. If Bitcoin were to suddenly crap the bed tomorrow, ultimately would the brakes get hit, on this trend as it's just getting started? So for me, taking away Bitcoin and correlation, if I were to remove that factor and just look at Tezos alone, in my opinion, if I were to look at a market like this, even if it did a big retrace, a huge sell-off, and then chopped around and did a bunch of random stuff, even if it were to do that, in my opinion, what this looks like is, it looks like an early phase of a bull cycle, and I'll show you the reasons why. So you can kind of see the size of these candles. They all seem to be relatively, these candles here got bigger. You can kind of see that they're growing a little bit. Anytime you have like big sell-off candles, like huge candles that gain in size per candle, you'll notice that there's often a retracement. There's often accompanied by a sell-off. Oops. But they're all relatively evenly spaced. So you can kind of see this one's about the same size in this one, but I'll show you some previous trends that we've traded and some previous examples. So, one example is Strat. So this is a market we got in on when it was like 5 cents or whatever. And this is one market that I didn't hold till the top, so there's, anyways. So you look at it in its early days, you kind of see, boom, big pop, big 1D candle, and then a sell-off, big 1D candle and sell-off. So like anytime it has a major spike in a 1D candle, it usually has a sell-off. So now you'll notice that these 1D candles start to grow as the trend develops. So this is about the same size as these two 1D candles, but then the instant it got even bigger, right? So this is, if I were to, let's say, duplicate this, clone it. If I were to clone this, you'll notice it actually doubled in size, right? Where you hit a local top. And then, so that was like a small parabola, right? It's like kind of like fractals within fractals. Small parabola, this was its first major spike in the trend, and then it had a massive sell-off. So if you were to look at like from here to here, you look at that and you'd be like, oh wow, that's a 10x in BTC and Satoshi value. Fairly solid play, right? Nothing to complain about if you make it 10x. And then it has a big sell-off. And now it's like, oh, 68% drop, right? So this is some pretty major price movements for a market happening in a relatively short period of time, because that's what crypto is really good for. Sometimes it can take a while, but even our periods of consolidation and accumulation and what quote unquote takes a while is still very fast and expedited, speedy process generally compared to other markets. Like it could take decades, for example, for gold to go parabolic, or other stocks could take years before they see like a 10x gain, unless there's some kind of just crazy movement happening in a particular stock and stuff. But in crypto, it seems it's the norm to have such extremes, right? And so you look at this, you're like, oh, this is a big deal, right? Big price deal, and you might feel pretty good about that until you zoom out, right? You zoom out, and then you're like, what was that flat noise at the bottom? Was this entire movement down here in accumulation when compared to everything else? So now check this out. So the reason why I'm pointing this out is I want everyone to be prepared, like just in case we do transition into a bull trending market, like a serious bull trending market, maybe it takes years. Obviously, this took, over a year and a half. This was like 2016. It took a while. It took at least a year for it to reach from there to there. Now, if you actually measure, here's something that's interesting. And so a lot of people might not know this if you're completely new to crypto, but if I were to measure this entire 10x move, so let's just beef this up a bit, measure this entire 10x move, which seems like a big deal, and now I compare it to other candles and price movements. Suddenly, this entire 10x move is suddenly, like when you get into the later phase in the market trend, suddenly you get candles that dwarf the size of that entire 10x move, right? So I don't know if there's like a technical term for that, but I kind of consider that like, zooming out onto scale, right? Looking at a trend and zooming out to scale. So you can see this one candle right here was twice the size of that entire 10x move. And so let's even take that a bit further, right? And
yeah, Rocky, that's why I another way that I've kind of said that over the years is like the chart scaling can be deceiving, right? Because what looks like big action in the early days of some either a stock or a coin can, like you said, it can be dwarfed once the thing wakes up, right? Once like bigger liquidity comes in. And like Strat's one example, but this is also what happened to Ethereum with us, right? Like that move from $1 to $15 we thought was insane. And turns out that was just the start of something way beyond our expectation.
Absolutely. Completely agree. So I measured another one from the bottom of that right to this breakout point, right? So you can see like it broke out of this lower range, but I was like, let's measure to this higher range too, where you can still see this market as trending healthy, right? You see a lot of really clean market structure and throwbacks, right? Breakout, retracement down to prior resistance turning into support. So measuring it from all the way from the bottom right to this breakout point here, you can see that even that entire move, even up to this breakout point, when the market started to go parabolic, which is to me is a sign of the end. When the markets go parabolic and you have these green one-day candles, basically in one day you have price movement that engulfs the entire dollar movement of the entire trend. When you start to get into that, you know you're getting closer to the end. So here, this would definitely be like first sign of the end, and then you got another one that's like that, and then it gets bigger, and then it tops out, right? So you see these massive candles. Now, percentage difference, the percentage difference isn't that drastic, right? So for example, this is a 75% percentage difference. I can probably measure that in one of these smaller candles. Here's a 58% percentage difference, right? So percentage difference of these candles, that the scale is similar as far as percentages, but the dollar value or the BTC Satoshi value will increase as it matures. Now, if you look at the percentage difference based on, like, let's say you're kind of late to the game and you buy it like here and you sell up there, you're making like 200%. But let's say it's rare to buy the exact bottom. But I think, we bought some at 5 cents, so I'm pretty sure that wasn't too far off. So you look at the percentage scale between the bottom to here, for example, you're looking at 200% versus 28,000%, right? So I'm going to show this for Bitcoin. I'll show it for Ethereum. So for Bitcoin, here's something interesting. So I'm gonna measure the entire run up on the first bubble, which was just seemed astronomically insane at the time, right? So here's a candle, the entire run up. And let's see if there's any candles in Bitcoin and later in the trend for Bitcoin that, so now you zoom out, this doesn't seem like that much, but we still never got any 1D candles. You know, it still took multiple days or weeks to get those kind of price gains until you got closer to the end of the trend, right? So you'll notice here, it's almost like double, and then the candles are getting a lot bigger. Now it's like, this is double what this candle is. So this one candle up here on the parabola, day after day, was like double the entire movement of the 2013 bubble, right? So this is how you can also start to tell when things are getting really kind of, you know, batshit crazy in the parabola. When you start to get these 1 day candles that produce dollar values that are literally, you know, twice the size of the entire bull run, dollar wise, you know that the trend is most likely coming to an end. So that's one way, like, you know, that's one way to tell if you're in a later phase in the market. Another way to tell is obviously like the angle of the price structure. You can see that like every time it made a higher low, the angle kept getting just a little bit steeper in the trend, right? And so this is like for crypto specific. I know there's parabolic markets, and you could probably apply a lot of similarities to the stock market. I just don't know if it's as drastic and if the market cycles are as fast and as consistent as what we've seen in crypto. Not to say that crypto is going to keep doing that, but so like two signs, in my opinion, of getting close to the end. Like a parabola, if you look at a parabola structure, starts out and then the angles curve up, almost like, think of it like a skateboard ramp. You know, you're going up a half pipe or whatnot. You know, you're getting momentum, and then coming up, and then you hit gravity, and then you're gonna, you know, obviously like the gravity is gonna hit you in the other directions. Right?
Yeah, I like to use the analogy of an airplane, right? It's like if you take off at like a respectable angle, you're going to be okay. But if the pilot jerks back and you try to go straight up, eventually you're going to hit counterforce and you're going to come down just as fast. Stall out. Yeah.
Exactly. It's going to stall out. So two main things that we could take away from a lot of these parabolic markets that we've seen in crypto, the later end of the market cycle before the bull cycle, before the bear trend, is the size of the candles dwarfing all previous price gains from previous cycles, and the angle of the market structure changing and getting more and more steep. We can see kind of something similar even with Ethereum. So I'll go to Poloniex because they have, I would say, the most data for Ethereum, and we'll look at the USD chart. But if I were to take the entirety of the Ethereum, the first Ethereum bull trend, I think this run up to the 20 something dollars was the first run up. And then from this point onward, this is, I would consider this a bear trend. Obviously, if you lose 72% of your value, it's safe to say that was a bear trend. But if you look at it on the bigger picture, similar to Bitcoin markets, structure, and that was just a retracement on an even larger move. So if you look at the basically the size of that entire bull trend, now when Ethereum started to ramp up and really go parabolic, it dwarfed that, right? On the first, you know, you start to get candles that are way bigger than that, and then candles got even bigger than that. So if I were to even measure from here all the way up even higher, let's make an even bigger one, all the way up to this area. I zoom out, and that seems like a big deal, but suddenly I don't think we had candles quite as big as that. Right?
It was almost a double on the final top. Yeah.
Yeah. Yeah.
And we can show, I saw a couple people talking about log charts, and we could show a log chart for contrast, but this is why I like the actual just regular charts better is because it's real life. It's what's showing the actual dollar amounts. And this is usually what we trade off of. And so two major lessons that I get from this is, one, chart scaling initially in the early days of a coin can be deceiving, right? If it does hit some kind of massive bull market, which there's no guarantee that any coin in the future will ever do that again. All we can do is show up, right, and place bets, and if it happens, it happens. But the other thing too is to understand, like, just from a mental perspective, right? Like, imagine if you got in at Bitcoin at $100, or like where we were trading Ripple at what, half a penny, or Ethereum at $1 or $10, right? What that, like, imagine what your psyche is going to feel like if you're trading and your mental anchor is, say, $10 on Ethereum, and then you start seeing daily candles where you're having swings of over $100, right? I think one of the biggest points that we can drive home with this is volatility is unparalleled and or unmatched in crypto to any other market. Like, it is the most volatile, the fastest growing. Like, you really won't see this type of growth or volatility anywhere else. At least I haven't in the past decade. So just kind of keep that in mind, and hopefully that helps with like the mental side and like setting expectations and thinking about these like kind of crazy future scenarios, and just know that like the price action can grow like that. But like, don't bet that every coin is going to do that. It's just, that's what can happen during big bull cycles.
Absolutely. Absolutely. So yeah, like looking at the log scale, you can kind of see that the overall trend. And I agree with Chris. I mean, like, log scale can be good for, if you're in an early trend, having patience to trend ride. But as far as like trying to, log scale at that later phase of a trend when the markets are parabolic is just, it's hopium, right?
Mm-hmm.
It's just pure degenerate hopium that's not going to help you. Like, people, like, these log charts are extremely popular when Bitcoin was at $20,000 in 2017. Market sentiment is extremely popular to chart with log charts, right? And so people who were trading with log charts got wrecked. People who were actually looking at a normal chart and could see how vertical this price action was, had warning signals. So it's almost like people were using the log chart to curve fit their bias, instead of like
justify buying during parabola.
Exactly, to justify buying or to justify holding and not taking profit or whatever, to justify their 100K targets or and so as far as like actual trading is concerned, I find just being able to see how vertical price movements can be with regular charts has served me a lot better than log chart. And one thing we pointed out several times, and this is one thing, like, when I was staying the course on my plan and my investment thesis with Tezos, right, which is kind of like, I personally call, for myself anyways, like a trial by fire, right? It's like, I think I was actually watching the interview Chris did with Trav on the boat. Great interview for anyone who hasn't seen it, and with Travis. And it's basically saying that, you can research the fundamentals of something, but then the price action can actually, for example, if you're in a short position and you know that a company is like absolute garbage, but suddenly like it gets acquired and the company starts pumping, but then, months later, it goes bankrupt, they realize the company is a scam or whatever. Your short position is correct in that the fundamentals are correct, and your research is showing you that, the company was garbage. and you were correct in shorting it, but still getting short squeezed because, you know, they say the markets can act irrational longer than one can stay solvent. So, you know, when I first started scaling into Tezos, you know, the backstory behind that is, you know, I invested in the ICO at 40 cents, right? So that was like a really good price to get in, but I didn't go in as heavy as I wanted to on that ICO because of my own personal risk management strategies regarding ICOs at the time. I don't really invest in them that much anymore. That was kind of the last major one that I invested in. But my risk management strategy is like, if you're giving money to a company or a project before it even has a network, you're basically just paying for an IOU, and there's absolutely no guarantees that they're even going to produce as good as the project sounds, as good as the white paper sounds, as solid as developer sounds. You still have to account for the possibility that something could happen, they might not deliver anything, and you could have a complete 100% loss. So I didn't invest as much as I wanted to in Tezos at the time of the ICO. So I invested some, and then I wanted to wait for the markets to open up and price discovery. And, you know, it took them a year. There was a year-long delay. So there was an actual very real possibility. And they got sued and all this court battles and all this crap that happened. And there was a very real possibility that I might not have gotten anything, right? So I had to manage risk and position size for the ICO. And so then what ended up happening, and so this is a project, obviously this is a project that was on my radar since the ICO in 2017. Then what ended up happening is there was these pre-market futures. And what a pre-market future is that the network is not live. There's no actual coins being traded. Everyone still just has their ICO coins or whatever. So you don't have a real true supply and demand metric in the market. But then an exchange will come out and say, hey, well, we're going to let you trade this pre-market based on synthetic supply. So I kind of consider that almost like similar to futures. And whatever you end up having, we will honor it one for one. So if you buy a crap ton of XTZ here for, you know, $11, by the time it goes live, they will give you your overpriced $11 XTZ or whatever. So I didn't participate in any of that noise because to me, that's not a true price discovery. I also don't really trust HitBTC because there's been some, you know, people have had issues and stuff. So in my opinion, price discovery only really started for Tezos right here before the drop. So once the network went live, and once it was on an exchange that I felt was more decent than HitBTC, and I was patiently waiting for the network to go live for pretty much a whole year. Then you see it went live on Bitfinex. And so I started actually sizing in based on, you know, my fundamental analysis, and there still wasn't a lot of price discovery. And of course, because due to correlation, the markets had a massive drop. So I had planned for that ahead of time. And what I did was I just cost averaged down, and then I participate in this accumulation here, but I brought my cost average down. Now that's a much different, that's not an approach that I recommend for everyone. You kind of have to have guts of steel to do something like that. This is what I would consider like a high risk to reward approach. And in a lot of instances, if you apply that approach and if you average down on the wrong investments or you average down on at the wrong point in the market. So for example, if you started like I saw people averaging down on Bitcoin from like $16,000 down, right? So like there's areas in the market where I think it's like building a house, right? It's like building a house. So for example, you're not going to use a hammer to hammer in screws, right? You want to use a screwdriver or a drill, and you're not going to use a drill for nails, right? So you need the right tools for the right part in the market. And if you mess that up, then it can actually be very painful. So because I at the time looking at Bitcoin price structure, because I felt like Bitcoin was capitulating, and because my investment thesis on Tezos never changed on a fundamental level, I still pretty much thought it was pretty much a top tier undervalued project. And the reason why I felt is undervalued is because of all the shade it got from the early complications around the one greedy person in the foundation was trying to take money for themselves or whatever, so they had to oust that person. And then there's, in my opinion, a frivolous class action lawsuit, and so on and so forth on, oh, you sold us a security or blah, 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 even though the person who anyways, I won't go into all the dirt on that, but it seems fairly frivolous to me. And now the network is live. So according to the SEC guidelines, they deemed Ethereum as not a security, as a non-security. And it was a security at the time of the ICO, but because the network was live, then they deemed it as decentralized. They basically deemed it as a commodity under the CFTC instead of a security under the SEC. So basically the ruling said that something can start off a security and actually change its nature based on how decentralized it is, right? So knowing that the network was live and that suddenly the control of the network was now in the hands of coin holders, the community, it kind of helped me pull the trigger a little bit more. So in this instance, I averaged down and I actually went fairly heavy. So everyone knows, well, maybe not everyone, because some people might be new, but anyone who's been with us knows what I've been doing, knows my strategy. Now you'll notice a different approach, still profitable. Both of these approaches are profitable. Chris's approach was just waiting for momentum to build up, waiting for a bull trend to actually develop and start scaling in on the breakouts as momentum's building up. And so the benefit to that approach is you don't necessarily have to wait around, and you don't have to necessarily buy your own blood, right? So there's,
Yeah.
so there's definitely some merit and some benefit to that. He starts scaling in as the market is moving, so on and so forth. So
yeah, Rock, do you mind if I add a little something to what you're saying?
Go for it.
So I just want to reinforce a very, 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 very important lesson that you talked about that I feel like some people miss. And I see a lot of people in crypto Twitter that are just completely oblivious to this. Like you said, the risk of an ICO is that what's the worst case scenario? You never get anything. It's either, an exit scam or it just fails before they actually put anything out, right? That's why I am, excuse me, that's why I am super conservative with ICOs. And I think that's why you were conservative on the initial ICO also. But the part that I think most people screw up is thinking that they're going to buy an early coin. So something that's been listed for less than a year on any exchanges like Tezos. This is the perfect example. Also, another one in the early days was Ripple. And Ethereum did this. Ethereum didn't hit a bull cycle for at least 6 to 12 months after being listed?
Yeah, that's right.
So the worst mistake you can make with an early coin, something that's post-ICO, that's listed, but still is early in the game on the price discovery game, the worst thing you could do is go all in so heavy that you don't think about the downside risk. And when, not if, but when the early coin has a big drawdown of 50, 60, 70% or more, you freak out and sell the low. and get all angry. Like I saw there were actually some idiots on Twitter that were trolling Rocky saying, "Oh, how's your dollar whatever, $1.30, $1.20, whatever bags on Tezos?" And when I see those types of people saying those things, it just tells me, it reinforces like those guys or ladies have absolutely no clue about risk management. Those are the ones that were taking their money in the markets because they are leading with emotion. They're not thinking about risk management, and they're the ones that get taken out of the game and then end up just being salty idiot trolls on social media. So like if there's one thing I can get across to you guys, and we've talked about this till we're blue in the face. So anybody who's new, go back and watch like the past several months of market update recordings, and you'll see this very clearly. There's a big difference in risk management between a trade, like a swing trade, and an early coin accumulation, right? That's why like in the watch lists and the trade alerts I've been doing on Tezos, even though I only started buying for the very first time on the breakout of 50 cents after accumulation, I am still very, very aware that my downside risk is 100%. Like, sure, I'm up a pretty significant amount of money right now, but I know that we could get into this resistance area here around 150, and then maybe some black swan fundamental event happens with Tezos, and it could still go to zero. So like you have to be aware of that. Now, if we look at a counter example of like something that's established, like after Ethereum had its first bull run and then bear market, and then it broke out above $20, at that point, I think the probability of a major coin like that going to zero is much, much lower than like one of these early coins. But you have to think about position sizing. You have to think about your average entries, and you have to think about the worst case scenario downsides, because the one thing that I hate hearing, and I've heard this same story ever since I did my very first videos and blog posts on Bitcoin in 2013. Every freaking year, it's the same story where I get emails or messages or tweets from people that are like, "Hey, I chased parabolic moves, or I didn't think about risk. I got too crazy, and now I'm down 80%. Like for our community, I just want to help you guys protect yourselves, right? Like I can't legally tell you exactly what to do. I'm not a financial advisor, but you guys just focus on the risk management and the downside, and that will put you immediately ahead of like 80 or 90% of everybody else that's in crypto. Because if you look at all the stuff that's really, really public, from the mainstream media on CNBC to a lot of these like newer YouTubers that just started doing crypto stuff since the last bull cycle, and even like the other, get rich quick like newsletters, like a lot of those guys don't talk about risk or position sizing. And that is the most important thing in investing. So sorry for going off on a little bit of a tangent. I just feel like that is so important, because if you get that wrong, it can crush you. And rule number one in this game is survive first. Learn how to survive, then thrive. If you just come in here and you throw money around expecting to get rich overnight, sure, you might get lucky. But the probabilities are against you. The probabilities are, if you trade based on emotions or trying to just chase, you will lose.
Absolutely. And like, we share our thoughts, and we share our trades and our investments and our strategies, and how we manage risk and the position size, the percentage allocation, all that kind of stuff. But one thing folks need to really, really keep in mind is that, it's not a one shoe fits all approach. Like what I decide to do will be different than what Chris decides to do, and will likely be different than what other folks will decide to do. And sometimes I will do something that's a specific strategy for the moment based on my own life and where I'm at in life. A strategy that's good for me that might not be suitable for other people. And so we share this information as a form of education, because obviously there's a lot that can be learned by watching how other people's thought processes and the way they handle their trades and investments. So
Yep.
we're basically, we're education and crypto trading and investing, and we share our thoughts out loud as we go along, our thought processes and what we're doing. And sometimes we make mistakes, and sometimes we nail grand slams and home runs. And so one thing that I also want to really point out is you'll notice that when I shared my portfolio allocation here, when I showed my crypto portfolio, and I posted something right here, I basically showed what percentage of crypto that I owned, and how much in my portfolio. And I showed that Tezos was over 50%. Now, that is not a standard strategy that I recommend, nor is it something that I've ever done in the past. Okay, so I have to make that perfectly clear. I don't have a habit of going 50% into altcoins ever in my portfolio. I've never done that. Not quite so high. Now, I've had altcoin gain so much in dollar value that the percentages grow, and then I got to take some off the table. But this is basically a unique strategy, not unique in general, like people can, anyone could put in any percentage of whatever. So that's not unique. It's not like I invented going 50% into something or anything like that, but it's unique for myself, to me, based on my current situation and what I'm trying to get out of life. Right. And basically, to sum it up, I might not necessarily nail exact tops and exact bottoms. It's sometimes it's not, when you do, it's nice, so sometimes that can be the case. But, like I started, I basically started recognizing the top of Bitcoin when we were going vertical at 10K, but it lasted for a couple more weeks, and it doubled from my initial projection. So I had the right idea-ish, right? I had the right idea. I recognized that we're coming to the end. And I knew what day it would be with the CME futures at the time. I didn't know what price it would be, so it certainly surpassed my expectations. But I knew enough in this market cycle to batten down the hatches and take profit and prepare, and to also make sure that I pulled out enough money for taxes and all that stuff, and to not make those mistakes. And so with the prices down here, is this the bottom? Do I know if this is the bottom? No, I don't know. It could be the bottom. I'm leaning towards a higher probability that it is, but if it's not, and it goes a bit lower or whatever, the general concept in this cycle is recognizing when you're getting closer to the top in the parabola, and preparing for it by selling. A lot of folks will know that I was very, very heavy in fiat, and that I really didn't really had to manage that, because, when you have, in 2015, I said this many times, in 2015 and 2016, like my crypto portfolio was like 100% crypto, right? In fact, probably like the majority of my net worth was in crypto at the time. I don't necessarily recommend that either. That's not necessarily the wisest approach, but that's just me. I did what was right for me. I was hardcore in crypto. I was a calculated risk. Is very high risk to high reward, and it paid off for me. It might not.
And you know what I think is funny and also valuable about like saying that and being transparent about that is that like it truly does matter like what your own personal situation is, right? Like if it's like so you were like, a younger dude, you were really swinging for the fences. You weren't like well diversified. You didn't have like a big portfolio in like the stock market.
Yeah.
So for you and you didn't, no kids or responsibilities like that. So you could afford to take that risk, right? Where if there's somebody who say, is like closer to retirement age and is looking at more like asset protection, right? And like, just like starting to think about living off of their assets, I think it would be like really crazy to go all in on crypto, right? And take all that because of the volatility, right? When you cash out, it might be a time period when you need that capital, right? So it truly is a very independent thing. And you just have to think about like where you are in life and what your risk tolerance is, and you know how heavy and hard you really want to go.
Absolutely, completely agree. You know, I had no kids, no debt. I could bootstrap with a smaller overhead at the time, and I also didn't have a lot of money. I didn't have a huge portfolio, so I was building up my portfolio. So I had to take bigger risks to get there sooner, right? Yeah. Also, you know, it was also based on my conviction at the time, and also my research and being involved in the crypto space. And it could have all failed horribly, and I was okay with that risk. If it did fail horribly, and the worst that would happen is that I lose a couple of years of work, right? Mm-hmm. And I was willing to sacrifice that for the gains, and it paid off. But absolutely, like if you're retired or at retirement age, or you've got kids and or you have a lot to lose, like ask me if I'd go all in crypto now that I've got a lot more to lose. Hell no, right? Like I'm diversified. I got real estate, metals, equities. Crypto's still a big chunk of my net worth right now. I did put a lot, since I pulled my money off the exchanges and stuff, I did funnel a lot of fiat into crypto. But again, that's like an adaptation to circumstances that happened in my life and needing to readjust my own personal risk to reward in crypto. So for example, you know, up here, the risk of not keeping a bunch of fiat on exchanges, the risk of the market crashing was much higher risk for me than the counterparty risk of keeping money on exchanges, right? So it was better for me to hedge and have money on exchanges. Obviously, I pulled money out of into the bank and stuff. But if you need active trading capital, then chances are you got to have something hedged on the exchanges and stuff. And I didn't want to pull it all out into the bank. And I still kept some Bitcoin. I have a simple rule: never go all out of Bitcoin. And now that the prices are lower, like so down here, circumstances changed. One of the exchanges I had money on got hacked. So suddenly like, oh, prices are lower. There's an 80% drop. Other things have dropped 90 to 95%. Suddenly the risk to reward changed for me. Suddenly it makes a lot more sense to take all that fiat, not have any money on the exchanges, and just hold my private keys and have a longer term crypto portfolio. So I had to kind of adjust my model and my risk. So now I'm back into a similar position as I was when I was starting out, down here, which is basically being all my crypto portfolio just being offline in cold storage. But I can do that, and I can afford to take that risk, because as much as it would suck if all of crypto were to go to zero tomorrow, would it sting? Absolutely. It would absolutely sting. You know, I'd take a massive hit on my net worth, but it wouldn't change. It wouldn't ruin my life. I wouldn't be bankrupt. I'd still have, I'd still have money to live on for years, because I pulled out enough, right? So I can afford to take that risk based on my own personal individual circumstance. So the reason why we're kind of reiterating all of this is that you can't, if anybody's new and they just join us, please don't just blindly copy us without like thinking about your own life, your own risk tolerance, and your own experience, right? I have lots of experience knife catching, averaging down on degenerate dips, accumulating things that are choppy and in the gutter. I've bought my own blood many, many times. I've developed a very thick skin and tolerance for that, and like risk tolerance for that. You might not be able to handle that level of heat if you started buying here to stay the course and to actually average down and accumulate. And if you, like I said, you do that on the wrong thing, like if you did that on let's say a coin that gets delisted. Let me show you an example. TRST. Let's look at a coin that got delisted. So let's say you're like, oh, I really believe in this project. It's so great. Oh, it capitulated. I'm going to average down. So, it gets delisted. The thing drops like 95%. You're like, no, I'm just going to double down. 50% of my portfolio is now in TRST or whatever. Like you can
That's why fundamentals matter. That's like the crypto version of a value trap, right? Like when a stock goes down and you're like, oh, that's a good value. And you don't realize it's like the company's actually dying.
Yeah. That's like, exactly. We see that in stocks too. And like something can literally go to zero. So
HMNY, perfect example. Movie Pass for anybody that doesn't know.
Yeah,
Trav, if you're in here, not to bring up a source. No, I'm just kidding.
I think Eddie Knife Catcher probably took a slight bruise on HMNY or whatever.
Yeah. Well, it looked like it was interesting there for a while. It was kind of like, the price is so low, and it's like, okay, well, if they do pull this off, like the risk is obviously 100%. The reward is like, okay, that could get nuts. So if anybody threw like a 0.25% of their portfolio at it, I could definitely see why.
Yeah. So the only time I personally will average down on something is on a knife catching a sharp capitulation bounce play, or an accumulation play. But you apply that to the wrong areas in the markets. You apply that to market going parabolic or at a later phase in the cycle or anywhere, and you could get seriously wrecked. Or you apply that to something with really crappy fundamentals. And, even though I obviously have a strong conviction in the fundamentals of Tezos, there's still no guarantees, right? I still don't have a crystal ball to say it's going to work similar to other projects in the past, and we'll all sing kumbaya. One thing to remember, it's still experimental. I mean, as much here, this is the risk to reward of it, right? Again, with big risk can also come big reward, but also big losses. So usually risk to reward is proportional to each other. So something like Tezos, for example, it is the very thing that is attractive to me as an investment, that makes attractive to me as an investment, is also one of the riskiest components of it. And I'll explain why. So Tezos is charting uncharted territory as far as blockchain technology. They're dealing with governance and consensus models on chain, the ability to change the protocol without a hard fork based on community voting and consensus. So this is groundbreaking as far as like blockchain technology as a blockchain paradigm. It is groundbreaking, as in it has never been done before. So if it succeeds, it has the potential to be massive. Just like Ethereum in its time was groundbreaking. It had the first blockchain that was Turing complete, meaning that you could program programs, you could put in applications, decentralized applications on the blockchain level. So the very thing that was appealing to Ethereum as an investment was also one of the riskiest components to Ethereum, and it had many, many hiccups because of this. It had the DAO hack as a massive hiccup, which was a black swan. So the very thing that made it bullish and innovative was also the very thing that caused a lot of growing pains, right? When you've got these glitches, because with Bitcoin, it's like a simple pocket calculator, right? It's hard to hack a pocket calculator. When everything is very simple at the base layer, it's hard for there to be bugs, and it's hard to hack it. But with Ethereum, there's a lot of extra complexities. So it's easier to find bugs. And there's been many multi-million-dollar debacles and bugs and growing pains with Ethereum. And right now, it's still kind of facing scaling issues. So the very thing that made it a kind of unique, a trendsetter, innovative in the blockchain space was also its curse too, right? So that risk to reward was proportional. So it's same with Tezos. It's a trendsetter that it's doing something new. It's like blockchain 3.0 technology, but because it's uncharted, unprecedented territory, we actually don't know how that's all going to play out, right? We don't know what potential black swan events lurk. We don't know what kind of bugs it might have, or so on and so forth. So again, those risks to reward are proportional, but taking a heavy swing for that for myself early on in the cycle means that if it plays out, my rewards will be huge. And one thing that we pointed out many times here with Ethereum in the early days, you could see from the top to the bottom, it literally from the 220 mark down to the 42 cents mark, it literally, and its opening, lost 81% of its value. So let's say I were avidly accumulating Ethereum and I'm like, you know what, I'm going to buy some here. Oh, there's a nice dip. I'm going to buy right here. I buy in at $1.20. Now, if you go all in at $1.20 and then it crashes 66%, all you do is, you either set a stop to cut out. But if you're accumulating it, it's a little bit of a different strategy than trading, because you're actually like trying to accumulate a position for the long run versus like an immediate trade with immediate targets, shorter term trade. Obviously, if you go all in, you're going to be in a world full of pain. But if you position size and you don't go all in and you have a lot of dry powder and a lot of ammo, you can get your average down and so on and so forth and participate more in this accumulation, then chances are it might work out a lot better. So, and again, this strategy that I've applied and I've done with Tezos is just based on the experience I have, where I'm at in my life. And one thing I've seen, like, you can get so wrecked, and it's very difficult. You can have cookie cutter rules in trading and investing. You can have rules on targets and stops and rules for accumulation and portfolio management, percentage allocation, position sizing, all of that stuff. And then every now and again, you might do something that's a little bit unorthodox. And you bet if you do something that's unorthodox, make sure that, it's a very calculated move and that you know what you're doing, because someone could join. I'll give you an example, two different examples, right? Someone could join crypto tomorrow and say, hey, look, I saw Rocky, put 50% of his portfolio into Tezos. Well, looks like that's working out for him. So there's this new project called TRST, and I saw it capitulated. I'm just going to replicate that, and I'm going to put 50% of my portfolio in this as well. And then suddenly it turns into train wreck and it doesn't work out for you, right? So again, that's really not a cookie cutter approach. Whereas there's other approaches that you can have models that are a little bit more consistent. For example, when Chris shows an example of a breakout trade and he measures his risk to reward and he shows an area where he would cut out with a stop and so on and so forth. Generally you could apply that to many different markets and many different scenarios. Very clean way of measuring risk to reward for your trades. So if you're going to do something a little bit higher risk and a little bit unorthodox, you can't just like blindly follow someone into the fire. And if you did, you might not have the experience or the guts of steel to be able to sit with that and to be able to manage emotions. Is it easy going into a position and starting to scale into a position with size that you want to accumulate something, a project that you feel is fundamentally sound, and then suddenly the markets take a big dump? Is that easy emotionally as a trader and investor? No, it's not easy. But do I have a lot of experience being able to, process and sit with those emotions and just work through them and still stick to my plan? Do I have the experience and through my crypto trading career and stuff? Yes, I do. Someone else might not be able to emotionally handle that level of stress. And it's not necessarily I would ever recommend anybody go through that personally.
And that's why we try to like set expectations and like put different types of trade setups in different categories, because the expectations are different based on how early you are into a project, what the fundamentals of a project look like, and to boot, like this space is constantly evolving, right? So like what happened in 2017 may never happen again, meaning like the market forces, the market participants, the things that caused all the markets to do what they did in 17, we may see something similar, but might look differently. The time horizons might be different. The percentage gains and losses might be different. The coins, the number of coins and the type of coins that pop off will be different. So we just try to, frame things as best as we can, showing like, hey, this type of setup, think about this type of risk, plan for it, because this is what can happen this early or late in the game. So I hope that's helpful and clear. I know for anybody that's new, it's a lot to take in today. We're kind of just shoveling a whole bunch of stuff at you, but it's really important stuff, which is why we're spending so much time on it.
Yeah, absolutely. And if, let's say you do some fundamental analysis and, you come to some conclusions that a certain coin or project could be a good, viable, long-term investment, and you're an early adopter. One thing that I've mentioned before that I absolutely love about being an early adopter on big projects, that's the key. Big projects that could actually end up being like a top 10 or a top 5 market consistently, is you don't know if you have a solid enough project, you don't know what news events will come upon the horizon. But if it's a big enough project, you'll know that there will be news events. And that's just one thing that I was saying with Tezos when it was really early. It's like, I don't really know what news events are going to come out of this, but I know it's an innovative enough and big enough project, and they have certainly raised enough money for their war chest, that as an early adopter, I can expect that we're just going to keep being trickle fed, bullish fundamental events as the network grows. And then sure enough, Coinbase Custody comes out, and they wrote a recent article on that, following up based on, or there was an article written on a podcast, an interview podcast with someone working at Coinbase, managing Coinbase Custody. And what this person has said is that large players, people who want to invest $1 million plus, so there's like the minimum investment for Coinbase Custody is $1 million. So people want to invest $1 million plus into crypto, whether you're a hedge fund or financial institution or just a private whale. They said that they were consistently asked by those large players for the ability to invest in a proof of stake coin and to also be able to participate in the network as investors. So they were actually catering to market demand, right? So
interesting. Was that Coinbase? Somebody from Coinbase that was being interviewed?
Yeah. So this is an article that I posted in the room yesterday. I'll search for that. So yeah, this was someone being interviewed, and so they were basically catering to investor demand, right? And so Tezos was a good fit for them because it made cold storage staking very easy. Basically, what that means is that you could keep your private keys on a hardware device and still have a running node where you're not actually risking your private keys on that running node, so you can isolate it and just sign keys to your node. And also they have delegation. So just kind of fit that model perfectly for them, which is why that was kind of their first choice. So for me, again, fundamentals, crypto, supply and demand, I just always look at things in relation to supply and demand. And so when I hear stuff like, oh, there's large players, there's demand for this type of product or service or this kind of coin or network, to me, that's like, okay, that means a lot of large capital, there's a high probability, higher chance a lot of large capital is going to get injected into markets like that, or that type of market. And we saw something very similar before the Ethereum, the second Ethereum bull run. We saw something very, very similar when I was mentioning this at the time, and people who were with us might actually remember this. But when Ethereum was here, there was basically this bear channel. Sorry, there's a forced capitulation wick. It's like a black swan. Basically, a VC had his Ethereum hacked and was forced dumped on the market. So I caught this capitulation bounce play, and then I started scaling on the breakout. As I was accumulating and scaling on the breakout, suddenly news broke out of Ethereum Enterprise. Suddenly, a bunch of big financial institutions were interested, expressing interest in Ethereum, and creating a private Ethereum version for them that's linked to the main network for them to play with their private bank coins or whatever, their private smart contracts or whatnot. So suddenly, while it was coming out of this bear trend into accumulation, suddenly the fundamentals were lining up bullishly with the technicals. We had confluence between the technicals and the fundamentals. And then, so that gave me even more confidence in accumulating and adding to my positions with more size, right? So I see a lot of similarities. Obviously, nothing's guaranteed, but when I see stuff like that, anything that impacts the supply and demand dynamic is, in my opinion, aside from the technology in and of itself, in my opinion, is one of the most important elements to the fundamentals.
Nice.
So anything you want to add to that, Chris, before we get into news?
Yeah. Can I grab the chart real quick?
Yeah, one sec. All right, go for it.
All right, give me one sec here. All right, can you guys see my chart? Cool. Okay. Oh, and by the way, I got word that we did send my team sent the email for the summer event. So you guys should have that in your inbox if you filled out the survey. If you didn't get it and you filled out the survey, let me know. It probably went to your promotions folder or something like that. But anyway, just want to let you guys know that went out. Okay, so I just want to do a real quick run through of just my TA on the immediate price action on a couple of things, and then we can get into news. So as we've talked a lot about, and as you guys know, like we basically, I bought the first breakout here in the mid 50s, then added and started to scale in on the dips. And I'm not at 100%. I would say I'm close to 80% of where I want to be. And the reason why, and this could actually grow, but I'm trying to be patient. And like I've been saying, my plan all along is to look for a much larger trend. Just like Rocky is not trying to overtrade the swings, I'm also not overtrading the swings. And one thing that I've noticed though, is we have had 1, 2, 3 runs, right? So if we measure these runs to the upside, 1, 2, 3, historically, and again, this doesn't have to happen, but the probabilities say that after 3 runs and when you complete multiple extensions, you can get a bigger pullback. So, and basically the 3 runs become like 1 run. So if I measure that, if we kind of zoom in and then just assume that this is like 1 run from like the low there, assume that the high is up here somewhere around here, then what I'm looking to do is give myself room in case there is a much larger, if this turns into like a bigger pattern, right? Kind of like the initial chart that I put in my first trade alert. If it does something like Rocky kind of alluded to this, but say we get a deeper pullback in somewhere inside of that sweet spot over the next several weeks, and then it does something like that on a much bigger scale, right? And again, it's really hard to determine the timeline on stuff like this. Like it could just keep going. Or if it does something much larger than this, I want to have more dry powder on the table that I can use to kind of build into that. So even though we're up quite a bit, I'm still just looking for a much bigger pattern to develop. If I look at, so that was the Bitfinex chart. And I don't know, for whatever reason, I just jumped between these 2 charts. You can kind of see here on the Bitfinex exchange, volume starting to increase a little bit. It's kind of a mixed bag here on Kraken. You can see the past few days we've had higher volume, but we haven't had a day as big as kind of the third day after this breakout. And then intraday, so just taking a look, you can see we had like a big kind of doji kind of spike here. There was probably a couple of big block orders that hit on this red candle, but again, it's still a pretty thin market, even though it's trading several $1 million a day right now. The intraday price charts, meaning like anything below the daily chart, just kind of looks kind of choppy, right? And that should improve as this grows over time, right? Like if you go back and look at like the intraday charts of the super early like Ethereum days, like even those intraday charts were super choppy. So this is kind of what I'm looking at right now. And just to kind of recap the immediate possibilities. So obviously there's a lot of resistance below, call it 140, 150. That's kind of an emotional price range as well, kind of even number. So we've got a lot of area through here to kind of get through. So the other possibility of kind of the immediate price action is what Rocky drew earlier, where say like we just get, and again, I'm not saying this is going to happen, but this is a possibility that I'm planning for. I don't know for sure what the outcome is going to be, but if we get something like this, why is that not? Okay, whatever. So let's say we measure this range, which if that price range of this channel is, call it 300%, and then we stack that on top, right? It's possible that we could get a 1, 2, or 3 day move that equals this range, right? This is what can happen on breakouts. So the bull case, kind of the immediate upside bull case is something like that. That's what I'm looking at. If we can get like say a 24 to 72 hour period where we get a push that equals this prior trend, that's going to be indicative of something much larger developing, right? So that's the bull case. The bear case, or the kind of, I would call this kind of like the medium case, is if we do a retrace of this move and we're not able to break $1.50, that's either going to turn out to be a multi-week or a multi-month top, and it'll take some time to develop further. Or if, say, we get like a big spike and then some whale like slams into it, and then we just kind of float back inside, the extreme bear case on the other side of that is that we could get back to the accumulation range, which at that point, if say we spiked down and we didn't slow down inside of that sweet spot retracement zone, I would not, meaning my personal plan, I would not buy more at accumulation. I would wait for another bull cycle to start to develop. So my mentality, kind of the way that I approach these super early coins that are just starting to show signs of life, is I'll build into a position early. If it goes crazy, great. I'll take some profit and then hold for hopefully a much bigger move. If it takes time to develop, great. I'll be patient with it. If it flops and say there's a black swan or some kind of negative event that comes out, I'm not going to add to it. I'm just going to basically do what I did like on Ripple in the super early days. I was accumulating at anywhere in between a half a penny to a penny. And for whatever reason, every time it would spike, it would get sold into, and we could never put in a 1, 2, 3, 4 breakout pattern. So I ended up bag holding Ripple for, damn, Rocky, how long was that? That was probably over a year, right?
Definitely well over a year, maybe a year and a half.
Yeah. So if something like that happens, recognize that is a very real possibility that even though things are showing signs of life right now, this could spike and then flop and then take months or over a year for like another bull cycle to kick in. So if that happens, what I do is I kind of shelf this, right? I keep it obviously on my daily watch list and I pay attention to it, but I don't have any immediate expectations of it, right? Until it wakes up again. That's the bear case. The bull case, if it does something where it gets a breakout and it equals this prior range, I'm going to be much more dialed in. And I'm probably, just because I like to do this, again, this is my risk tolerance and my personality. If we do break out and we get some kind of parabolic move, I'm probably going to take like 10 to 20% off the table, just because that helps me sleep better at night, knowing that I took something.
Yeah.
I could still lose money on it if it completely failed over time, but I like to scale. For those of you that have seen my trading style over the past, 6-7 years, whatever, I really like to scale in and scale out, because I can't, just like Rocky can't pick exact bottoms and tops. I'm also not perfect in that way. So I like to remove that pressure off of myself by scaling in and building into a position, and also scaling out and moving out of a position. So does that make sense, guys? Everybody clear? Do you guys see like the bull case, the bear case, the medium case, and see the thought process behind all of that? And any questions, comments?
You still have that neck tattoo from our Ripple bag holding days?
Got that laser removed.
Yeah. Once you took profit, you had it laser removed.
You know what's funny though? What was it? 2016, where I tweeted, I said, hey, if Bitcoin hits $1,000 by, I think it was like some date, I'll get a Bitcoin tattoo. I was saved by 12 hours.
I was disappointed. I was looking forward to a Bitcoin tattoo.
I probably should have done it, and I still might. I don't know.
I don't know if honestly, if Tezos, like, I'm just saying this crazily, but if Tezos ever hits my highest price targets, I'm gonna tattoo XTZ under my eye. Because at that point, nothing will matter. No,
oh, that's funny. All right, cool. So that's XTZ. Thoughts on that? BAT. I don't have a huge position on this, but it's looking really strong. If we look at, this is the longest. This is a USD chart. I believe this is the longest USD chart that we have. So as you guys know, just catch you up, scaled in some here in the 16-cent range, I think. Added a little more on the breakout. I think I was using, Coinbase. So, bought some here at 16, bought some more on the break of 20. I like the Bitfinex chart just because there's more history. So if we kind of zoom out, you can get a perspective on what's happening. There's a ton of overhead resistance here at 40 to 50 cents, call it. So I'm not going to build any more. I'm not going to buy any more into this resistance level. But if we do something where, say we kind of come up, and so here's what I think the highest probability is, just because this is what this thing has done, is a VTOP. I don't really know if I expect this to break out and go crazy, but let's say that it doesn't just VTOP here, and say it does like a cup and handle or a bull flag, and then it does break out 50 cents on strength. I'll probably add to that. This is one I'm kind of regretting not buying a little more lower, but whatever. Woulda, coulda, shoulda. Let's see, what else is there? You guys know Bitcoin, what we talked about with that. Those are really the main ones that I've been focusing on the past couple of weeks. BNB is one that got away from me. This is just a beast. And this is why I've always said, like, I just love crypto exchanges as a business model, because they're freaking cash cows. And this is why I bought the T0 STO. I didn't buy their ICO. I bought on the exchange around where prices are now, which is, as of yesterday, they were around $3. I haven't checked today, but that's why I like exchanges, because they're cash producing machines, and Binance is just rolling in the dough right now, and the price of their token reflects that. So, one more thing, and then Rock, I'll pass it back to you. I've been seeing a lot of people asking the questions like asking questions like, what? Nope. Here we go. Asking things like, what do you think about buying X coin here? Okay. Whenever I see this question, guys, it tells me that you haven't thought through your plan. So before anybody asks us something like this, I would really prefer if you guys actually told us what your plan was. And again, we can't give you financial advice. I can't say like, oh yeah, Jimmy, buy XYZ coin at 50 cents. Like, we legally can't do that. But even more important, or just as important than that, is like, if you're asking that question, it means you haven't thought through the trade plan. So like, what is a trade plan? Well, what is your setup, right? What's the risk, right? And all the risk. Like, are you going to use stops? Is it an accumulation type risk? What's your plan for it? Also, what's the reward or the expectation, right? Is this a single entry, or are you building into a position, right? There's all these questions that if you ask this, like, we really can't give you an answer if that's all you say, because it's incomplete information. Like, we don't know what your thought is. So the most helpful thing, if you do want some kind of feedback, is to say like, hey, here's a chart, here's the trade setup, here's my expectations, here's how I'm framing risk to reward. Like, at that point, we at least can say, like, maybe spot blind spots and say like, oh, but did you consider this? Or, like, hey, you're buying, you're looking at potentially entering a position where you have no prior position. So that means your average price is going to be 2,000% above where price was a week ago. Are you considering the downside to that? Right. So if you guys do ask us questions like that, just know like, hey, we can be of more service to you if you give us more information. Right. Does that make sense?
Yeah, I remember in December 2017 when we had just a flood of new users to crypto, and I was getting hammered with the same question every day. What coins are good investments type of thing, right? Because people are excited. They just joined crypto. They want to get in on the action. It's exciting. And, it was the least sexy answer I could give. But I was like, well, I can't really tell you what to do. But I'm mostly in fiat right now. Have you heard of this coin called USD? What? I just joined crypto. I want to build a crypto portfolio. I was like, well,
USDT, USDC.
Yeah, USDC. Yeah. So that's kind of ironic, when you have like so many new users coming into crypto and they're all excited and they want skin in the game and they want to build a crypto portfolio.
Yep.
But everything's overvalued. It's like, well, don't sit in, if it were me, I'd be singing dollars and waiting months until this thing crashes type of thing, right? Or longer.
Yep. And so, I mean, I saw somebody post earlier in the chat that we actually helped them save themselves during the bear market, which is, just as important, right? Like not just getting one-sided and getting caught up in euphoria. Yeah. By the way, I'm just looking at the gainers list real quick. I don't see anything too crazy. Have you traded Orbs?
Orbs. My goodness. Isn't I think isn't Orbs linked to when did that start?
I don't know. This is
it's not linked to BitShares, or there was one in BitShares. That I think that's different because that looks like a newish market, but
yeah,
that's really low cap.
Yeah, the cap wasn't even calculating on there. This is 36 mil. Binance 20.
That seems like an early breakout there out of a lower range.
Yeah, I'm just wondering if it's like a TRS. I don't. Do you guys know anything fundamentally about MITH? I don't.
It's popped on my radar a bunch.
Yeah, I wonder. It looks like there was some kind of news event, maybe, or maybe that's just a random spike.
So it's the first project on Binance chain.
Oh, okay.
Yeah, anything with Binance is probably gonna, pop.
Yeah. So this is one. So check this out, guys. Just talking about some TA right here. So this looks a lot like Ripple in the early days, where like, you know, you get kind of like the listing of death, right? Where there's no underwriter to like price this quote unquote IPO, right? Before, so a lot of coins do this initially, and then they bottom out. I don't buy into the first spike. So what'll happen a lot of times is you'll get like a high volume spike, and then it'll spike right back inside of that range. A perfect example of this more recently is Poly. So if you take a look at POLY, so if you look at this, you look at the market structure, it's like you get sell-off, spikes, but it never gave you that 1, 2, 3, 4 pattern. So it's just lower lows and lower highs throughout this. And so I would just be very careful, like on something like this, looking for going, oh, look at that big volume spike. Okay, let me buy the high. And then the next day, so it's on, this happens all the time where you'll see something on the gainers list, right? So it's like number 3 today, and you're like, holy shit, $50 million, blah, blah, blah. And then one thing you got to pay attention to is how much of this is real volume, right? Like I don't trust BitHum. I don't trust OKX, right? Like Binance maybe. Yeah, Binance maybe. Like I don't know most of these crappy exchanges, right? That can fake the volume, right? But I mean that does look like real volume to me. But what can happen is like tomorrow you could see this on the top of the losers list, right? So if it's up like, what's it up? 50% today, tomorrow, if it does even a 50% pullback, which is highly probable, it's going to be somewhere on the top losers list, right? And then that's where you get that whipsaw of emotion. So just be careful about that.
Yeah, absolutely. We have one question. Rocky, have you done a price projection analysis on XTZ if it follows ETH given a supply? Are you thinking 100? Baking probabilities complicates supply and demand. So yeah, I mean, it's difficult to, obviously create a longer term forecast or price projection, but in the event, in my calculations, or in the event of Bitcoin breaking,
feel free to take the chart, by the way, Rob.
All right. In the event of Bitcoin breaking all-time highs, let me just, if Bitcoin breaks all-time highs and we start a new mega bull cycle, then at $100 a pop, that would actually put Tezos at a $66 billion market cap. At 50, it'd be 33 billion. To compare it to something like Ethereum at its peak market cap, we're looking at 134 billion. So at $100, it would be half of what the peak market cap was of Ethereum. I assume that if Ethereum keeps chugging along or whatever, its market cap might break a new all-time high as well, depending on if it stays a top player or not. We don't know. So based on, if I were to follow similar projections and stuff, like my higher targets, which I'm going to keep some gas running, some fuel for this, would be the $50 and $100 mark. And that might be absurd, and maybe that'll never happen, right? In the meantime, while I'm waiting, the cool thing is I'm baking. So I'm getting passive income. Every 3 days, I get new XTZ showing up in my wallet. So I can afford to be patient and wait to see if what will become of that. Looking at news events. So I feel like this is a fairly major news event. So e-commerce giant Rakuten, if I'm pronouncing it, Rakuten, I don't know how to pronounce that, opens its new crypto exchange to customers. Look at this, banks trying to show me some. Anyway, so this is interesting. So when you have big giants, like, so Japan, for anybody who doesn't know the background story of Japan, crypto is going mainstream in Japan, right? It's like fully regulated. It's recognized as an official currency. You have big tech giants. You have like the largest internet service provider in Japan, who has created a an exchange, right? And now you've got one of the large e-commerce players creating a crypto exchange. So we're seeing more growth. That's just an on-ramp for user adoption. Obviously, you look at a country like Japan, or any country in general that has millions of people in their population. Again, supply and demand. So I think that's fairly interesting news. Some other news was apparently Chicago trading tech firm is partnering up with BitMEX to unleash crypto derivatives. Now, they're not going to be doing that in the US. Apparently, I think they're going to be doing it through their Asian branches or whatnot, maybe Singapore, because these are still forbidden in the US. They're not regulated in the US. But again, this is just more legitimacy and more growth in the industry. And then I think the biggest news for anybody who's on Twitter or has just been following crypto in general, there's been a lot of drama over the past few weeks around BHCSV, so quote unquote Bitcoin Satoshi's vision or whatever. So apparently Craig Wright is suing a bunch of people for defamation and stuff, and it's just been like a kind of like a nasty battle back and forth. And so basically, as a result of him suing basically Bitcoin developers, he's been going after actual Bitcoin developers and a podcaster named, his name's Peter. He's been going after him just because Peter is asking to be sued. He was so now, and he's got pro bono services from like 15 lawyers who volunteered to represent him pro bono. So that's kind of interesting case. But in order to prove defamation, he has to prove that he's Satoshi in the court. For anybody who's been following, there's actually sites that link all of the plagiarized and forged documents that he's created over the years. That there's evidence to show a long trail of forgery and plagiarism. You know, some of it includes fake signing of private keys and so on and so forth, or changed backdated blog posts, or putting doctor on his name, but then the University of Australia tweeting and saying he didn't actually get a PhD at a university, so on and so forth. So I'm not saying yay or nay, right? I'm not an investigator or cryptographer looking into all the nitty-gritty details of this. The whole thing seems a little bit shady to me, but what's interesting is that all this is going to be going toe-to-toe or coming to heads in a court. So we'll probably see a lot of interesting things come out of that. But as a result of him trying to dox and sue a bunch of people, my point is a bunch of exchanges started delisting BCHSV. They started delisting it. Binance started the trend, and then Kraken followed suit. Shapeshift, a whole bunch of exchanges started mass delisting this, and you saw basically like a big dump as a result. Let's just see here. But like I was saying earlier, when I see big dumps, there's often counterforce and bounce plays, but that's fairly weak. 13% right now is fairly weak on that, and I'd be very, very careful with knife catching things that get delisted, because sometimes they don't recover. They might have a small little bounce, but they might not necessarily recover. So that was interesting, and that's created a whole bunch of controversy of some people who are against the delisting saying that it's censorship, other people who are for the delisting saying that it's a self-regulation, right, in a free market. I tend to lean towards, my personal bias is I don't like the coin. That's my own personal bias. Could I be wrong? Maybe. But my own personal bias says that this is a free market decision. For me, the line of censorship is, there's a huge difference for me between a business choosing that they don't, like, no project is entitled to anyone's business in a free market, right? So there's like thousands of coins out there, and many don't get listed, and other coins get delisted all the time. And that's the private business of the exchanges, to determine how they want to run their exchanges, what they want to list, what they want to delist. That's their own private business. And so no project is entitled to a listing or liquidity. No project's entitled to us trading it or any liquidity or anything, right? Or people investing in it. So to me, delisting that is just a private business decision. And I don't necessarily think that is censorship. If someone doesn't like that, guess what? Anyone can go out, create a company, launch their own exchange, right? It's a free market. You don't like it, you can create an exchange. You can compete. You can go toe to toe, right? Everyone's free to do that. What I feel is censorship is that if suddenly people came out and said, you cannot trade this coin, we are forbidding you from actually trading it, right? There's a huge difference between we don't want to trade it on our exchange anymore because it doesn't match our ethos and what we believe in, versus you're not allowed to trade it. No one's allowed to trade it. If you trade it, we're going to kidnap you and throw you in a cage, right? Like to me, there's a huge difference on that line of censorship there, right? No one's forced to not trade the coin. There are some exchanges. There's one, OKCoin came out and said that they will continue to trade it and that they're very pro BSV or whatever. So you're going to have that option, right? For people who want that option is going to exist. But in a free market, if people feel that there are bad actors, then, according to market sentiment stuff, entrepreneurs who are also just users can make that executive decision that they don't want to do business with that based on people's behavior and stuff. So in a sense, it's very, very interesting. There's so many very, very interesting things happening in crypto. It really takes you into, the birth of an economy. It takes us into securities law. It takes us into, you pretty much, like, cryptocurrencies has made us reanalyze and reevaluate many, many things in our society and how we do business, including securities laws, commodities laws, all of this stuff, technology, software, freedom of speech, cryptography, all this stuff, right? And there's a lot of gray zones, because whenever you get a new paradigm in society, like the internet, it can create a lot of gray zones. And oftentimes regulators and stuff have to catch up with the tech and the innovation. So long story short, it's been a very interesting drama to watch. So I've ran out of popcorn. I need to buy some more popcorn. Fortunately, I did go 100x long on the corn futures. So that, anyways, so that's the big drama. Aside from that, not a ton of news. That seems to be the big kerfuffle. Every week there seems to be something. So usually I won't necessarily mention drama on the news section of this, but I think this is a big enough and interesting enough news, the delisting, that it was worth mentioning. If you happen to be pro BSV, I don't care. I'm not going to hold it against you, even if I don't agree with it or whatnot. We obviously have a policy that everyone is, we encourage people to do their own research, their own due diligence, come to their own conclusions, and to make their own trading and investing decisions. If you counter trade me, or if you invest in something that I disagree with or whatever, then, all the power to you. I'll never, ever discourage people, and I'll never argue with people about who's right and what coin. Like, that's just childish stuff. Everyone's got to make their own decisions. And I might disagree with people, but I'll certainly defend everyone's rights to, have their own opinions and to make their own investment decisions. Because, being autodidactic, which is, self-education, being autodidactic and making one's own conclusions and investment decisions is really what it's all about for us. This is what we preach, and this is what we aspire to create out of this, educational crypto community. So,
but Rocky, fighting on Twitter about who's right is so much more productive than actually making good trades.
Well, I'll tell you, certainly from I try not to get as entangled into that kind of stuff, and And so I try to play the witness observer on Twitter. Every now and again, I will. If I see something that's ridiculous, I will pipe up and say something.
Yeah.
But I'm not nearly as, like, people can really take it too far. Like, as much as I don't like BSV, I like that ticker, BSV. That's what I'm going to call it for now. BSV.
Bcash V.
Yeah, Bcash V. Some people have really taken it too far with the trolling, lot further, crossing boundaries that I wouldn't necessarily cross, because as much as I might disagree with some people, as much as I might disagree with people's actions, and I might occasionally speak out if I feel like someone's, crossing a line with their actions, I still have to have some level of general respect for people as human beings. And sometimes, like, troll brigading and stuff like that goes a little bit too far and can be a little bit too cultish, right?
Yep.
So I think people have gone a little bit too far on it. I understand why emotions are high. For all we know, this could all be an attack on Bitcoin, a sociological attack, social attack, right? If you're patent trolling and creating patents for everything and then trying to be Satoshi, was to say you won't sue all the open source projects or whatever, right? Like, that can create a massive legal vulnerability, which is would be a psychological operative, right? So I understand people's emotions and the need to kind of defend or whatever, but I think sometimes it can definitely go a little too far, and people have to realize, as much as you disagree with other people, you should still be civil and still try to maintain some level of emotional intelligence, and also have compassion for other humans, even if you disagree with them, or even if you think that they're making false claims or whatever, to still exercise some degree of compassion. So that's my middle path.
I just think it's too just a really good discipline and self-control of, like, the people that buy into the story of, like, one forked coin over another. It's like, why not just be objective and, like, removed from the emotional, like, attachment to any of them, right? Like, that makes us better investors and traders, period. So I think you'll make more money if you're not, a bandwagon jumper or whatever.
Absolutely. And I'm not I'm not very big into a monocultured ecosystem, right? In nature, if you clear cut and take out biodiversity out of the forest, which is like a mix of various different types of plants and trees, and then you just plant a single type of tree in a straight line, they're more susceptible to diseases, so on and so forth. So there's actual a certain level of strength and robustness to diversity, to biodiversity. And I think economically, I think the same could be said for the health of the crypto industry, as far as the health of decentralization. If you only had one single coin to rule them all, and let's say Bitcoin, we all know Bitcoin's a dominant coin, a dominant market, and I respect that, and I see it for what it is. But I'm not a Bitcoin maximalist, predominantly because if only Bitcoin existed and there were no other altcoins, then number one, that would be a single point of failure. Now you only have one network and one project to attack, and now you've killed the entire crypto industry, right? We can't fool ourselves into thinking Bitcoin and crypto and the idea of decentralization doesn't have powerful enemies that doesn't like that idea, that wants control and centralization, because it's the antithesis to what they're trying to achieve and their goals and agenda. So obviously there should be probably enemies and attacks that will happen on it. So if you only have one coin, then that's a monocultured coin, single point of failure. But let's say you take out Bitcoin and then 1,000 altcoins pop up, like it's like a multi-headed hydra. How do you stop it, right? And so also number two is that Bitcoin was open source, meaning that everyone is free to copy the code, to tinker with it, to create their own versions, to experiment. We've seen a lot of experimentation in blockchains and altcoins that we never saw in Bitcoin, because Bitcoin has a certain, the developers want it on a certain trajectory and they're extremely conservative. And for a like $100 billion market cap or whatever, they have to be very conservative. Whereas smaller, more niche projects can be a little bit more experimental, smaller cap. They can take bigger risks because they don't have as many investors on the line and stuff. So I just think it's generally healthy for the ecosystem. And I think having competing coins and projects and networks and stuff and experimentation is healthy for decentralization and the open source community. So that's where my thoughts are at. So I'm not a one coin maximalist, right? Anyways, so
on that note, it's 2 hours.
We've hit the 2 hour mark, folks. So Big Kane is gonna drag us off the stage. So I think that pretty much sums it up, unless there's anything you want to add to that.
Yeah, Bcash V to the moon.
All in BSV.
No, I think we covered a whole lot of stuff today. I hope this stuff is helpful, guys. If any of it was confusing or whatever, let us know. Yeah, I'm just thinking if there's anything else. Nope, I'm good to go.
Covers
Saw a couple questions about the boot camp. We are still updating that for a bunch of videos and lessons and things that we want to add for this year. So yeah, Warren, we'll definitely let you know. Yeah. So you guys have a great one, and we'll see you in chat.
Sounds good, folks. Take care. Cheers.
Oh, also for anybody that wanted to come to that summer event, that email did go out. So just let me know if you didn't get it. I know last year we had a couple of people that the email went to their spam and they weren't able to register and they were freaking out. So just want to make sure you guys heard that. Go check your spam folders in case it got filtered. So, all right, guys, have a good one. We'll see you later.
Take care, folks.